Good morning and welcome to the Leadership and Insurance podcast. I'm your host, Alex Bond, and I'm very lucky to be joined by Emilios from Hellas Direct. Emilios, how are you, sir? Are you well?
Very good. Greetings from Athens.
Greetings. Yeah, you're our first person based in Greece to join us. So I think we've got France, Greece, US. I'm probably missing. Oh, Germany, definitely.
All the major Fintech centers of the world, right?
Exactly. There's a lot more going on in Athens than I'd originally thought. I was speaking to a couple of fintechs on the AI side that are more bank focused. But what's the community like there? Is there a bit of a fintech community in Athens?
It's actually growing, and I think most of the technology, I would say, activity in Athens is about companies that are based in Athens but operating abroad. Yeah. So we had people like in telcos or in marketing space and so on. Fintech, we're beginning to see now some of the big players establishing offices over here just because one of the founders was Greek or there's a Greek connection. But yeah, I think one thing leads to another. We're beginning to have some sort of vibrant technology scene over here.
No, that's good. But I'd better let you introduce the Hellas Direct before we start asking you about the fintech scene in Greece. Please tell the people that don't know what about the business and
We are a traditional insurance company, but what people call Insurtech these days. Yeah. We are a full stack insurance company. We started with my co-founder Alexis Pandazis about 7 years ago. We got full regulated in Cyprus. We passported into Greece, and now we're expanding into a number of other countries. At the time when we started, we just call ourselves a fully regulated insurance company with a lot of technology that we built for ourselves. And ever since then, we caught up with terms like Fintech and Insurtech and all these full stack insurance companies. So we're a non-life company. So we focus mostly on car, property, and personal lines. We don't touch commercial lines yet. We might be going into SMEs pretty soon. And as I said earlier, we started with the Greek market, about 2.5 billion kind of market, but we're extending soon in a bunch of non-core European markets. Romania, Czech, Slovakia, Slovenia, and so on, staying away from the core markets. We'll have this discussion down the road, I think.
I was going to say, I want to touch on that in a bit. So let's not go too deeply into that. So the first thing there's a couple of things I wanted to sort of go back to the inception of the business. So 8 years old now, is that right? Did you say?
Yes, that's right. Yeah.
8 years old. So in Insurtech, before Insurtechs were a thing, so you get the early adopter hat. What was the sort of genesis? Why did you sort of? I know you're an actuary by background, but you sort of moved away from traditional sort of insurance interaction, more into investment banking. Why then, and why at that point for you?
Good question. I think for me, I've always been in insurance. I started. By the way, I started in computer science before the internet. And then I moved to actuarial science. I qualified as an actuary in the UK. Mm-hmm. And then I spent 3-4 years with McKinsey and Goldman's in London, again on the insurance side of things, but sort of doing a lot more sort of consulting and investment banking work. I guess one of my first experiences when I was in the US with McKinsey. I experienced the first downturn back in 2001 when a lot of insurance companies experienced a lot of problems, and I saw sort of the big genesis of a bunch of insurance companies at the time that did really well. So I kind of had this thing at the back of my mind that when in crisis, starting a non-life insurance company actually works really well. I also spent a lot of time, working with or experiencing the likes of Direct Line or Admiral in the UK. So I've lived through that, revolution, if you like, way before the internet and so on. So when the financial crisis of 2008, 2010 hit Europe, we were talking with my co-founder at the time. We're both in the UK. We thought, okay, now it's a good time to go and start our own company, and let's go and start an insurance company. Now, two options: start an insurance company in developed markets, or go after sort of the emerging markets, also the less developed markets, if you like. We opted for the latter. I think for us, again, you're not going to go to a tiny market and try to invent insurance, but for markets like Greece, there's sort of 2.5 billion kind of markets where the margins were higher. The consumer was going through exactly the same sort of discovery that some of the consumers in Western Europe. It made it like the perfect sort of environment to start a company like this one. But we went sort of the long route. Rather than going and setting up an MGA or like a broker or anything like that, we went to get fully regulated, knowing from the very beginning that this was going to be sort of a long path as opposed to like a quick flip.
Why did you do that? Because it would have been a lot easier, surely, just set up an MGA, get going with that model, and then maybe go down the line and go, right, we'll turn this into a full stack proposition. Why did you?
So that's a good point, actually. But to be fair, it depends also what sort of horizon you have and what sort of business plan you have in mind. From our perspective, we always knew that in order to disrupt insurance in this part of the world, you need to control the full value chain, and you cannot just take a small part and depend on others. The reason these markets are not as developed as they are in some of the other jurisdictions is that there's a lot of activity missing. The value chain is not as efficient. It's not like you're in London, you can set up an MGA in 2 days. You can hire a TPA for your claims. You can hire a team to do administration. That kind of doesn't happen around here. Plus, we believe that once you build this value chain and you put it in place with your own conditions, with your own sort of controls, you achieve two things. You control the unit economics, so you can actually make more money across the value chain. And B, you create what my Canadian shareholders like to say, the moat. You can protect your economics from everyone else coming through. Just to give you a couple of examples, like Greek and Cypriot property insurance, in absolute terms, not in relative, in absolute terms, they make more P&L than London property. Just to show you, yes. And just to show you how some of these inefficient markets, when you look at the ROE of some of the local insurance companies around here, they are spectacularly good compared to some of the competitors in London or some of the other more efficient markets. Sure, you are trading a smaller market compared to actually significantly smaller market, but at the same time, the profit pool that you're trying to disrupt over here is much bigger than perhaps in London or Germany or somewhere like that.
That's really interesting. It really makes me smile. This is a very bad analogy, but go with me on this. When I started out in recruitment, I specialised in claims and sort of back office technical functions, so reinsurance management, all those sorts of things. And suddenly someone went, "Why do you focus on that?" And it was because it was the area that people weren't looking at. I was like, why? Because the other part of it is, why go and fight the big guys in their own backyard? Because you're probably going to lose. So there's opportunities out there. But did that come from, localized knowledge? Was it something you kind of analyzed all markets or is it coincidental that you know that market anyway?
To be fair, we did not know that market. Actually, none of us is from Greece. We're both from Cyprus, and we spent actually most of our adult lives abroad. So it's not that it was a homecoming exercise where we knew something about it here. It's just, I think for us, we were looking for, we did travel. We spent like a couple of years traveling before launching our insurance company. We were not a 20-year-old entrepreneur. We're like a mid-30s entrepreneur. So we had a little bit the consulting approach, the most sort of risk averse. So we traveled, we talked, we spoke to market participants. And I think our conclusion along the risk return trade-off, just to throw some sort of consulting bullshit there. I think that it was obvious that in this part of the world, you had a bigger profit pool, you had sort of a value chain that was kind of oozing from sort of inefficiencies left and center. But it wasn't like a low-hanging fruit. It wasn't something that you would go to London and within a year you would have an insurance company. You would have to build everything before you actually achieve something. And again, the question we had to ask ourselves is that, guys, are we here for the long run? Are we prepared to go in and develop our technology and do everything from scratch? Build the entire thing, including claims, road assistance, blah, 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 before you start seeing some some sort of results coming out of this one, or is it something much more kind of quick and dirty? Now, our view, again, because we were 30-something-year-old guys, and because we knew what it involved. Perhaps if you ask me now, would I do it again? I would say yes, but only if I were 35, not when I was 35 or 45. Yeah. But again, we're sort of thinking about building the right business, not kind of trying to arbitrage conditions either in the capital raising or in sort of some other part of the industry. And some of the things we're beginning to see right now that makes us a little bit uncomfortable is that we see people just launching companies on the back of a fashion on capital raising as opposed to the real fundamentals of the business.
There's a whole can of worms I'm probably going to open up there, I'm afraid. Let's talk about investment, because I think that's interesting that you clearly had a long-term view. It's a really obvious kind of, when you lay it out like that, it's a very obvious strategy, but therefore it kind of dictates the type of investors you've got to get on board, because they've got to take a long-term view as well. Did that make it harder to attract investment?
It did, because frankly, no one, I guess when you talk about some of these unsexy markets and about, contrarian kind of plays, you don't get, the bullish guys coming through. It's like now talking to someone about shorting potentially, the tech stocks. So you're a contrarian kind of person. Now, it was very difficult to convince the obvious bulls, and it was, very difficult to convince someone who's never done this kind of thing before. So we had more traction with people who had insurance knowledge and a global perspective than for someone who knew Greece or the area, because it was much more difficult to convince a real estate investor or a family office here to cross into an unknown territory, as opposed to someone who's done insurance around the world, or they've seen how this kind of contrarian plays work. So our first group of investors, we had a couple of offers from private equity firms at the time, but we went with a bunch of family offices who had this contrarian view, and a good backing from reinsurance. Our first partner was Munich Re on a multi-year risk sharing at the time. And so we believe that in this collection of family offices and Munich Re, we had long-term enough capital, a good knowledge of what it takes to be a contrarian play. It wasn't somebody who was comparing your performance against owning a London flat or something like that. And to be fair, we were in a market where Europe did not have the classic VCs or the classic kind of early growth funds that you would have in the US and so on. Which by definition, by not having that, the opportunity became even more obvious. So we became a little bit like Marmite. You either hate it or love it. So when you talk to investors, either investors would get it in the first 5 minutes and say, yeah, sure, I'm in, or some would like, okay, I don't really get it. Why is this going to happen? And this, that, the other. Now, as we'll be maturing as a company, became more institutional down the road. So 5 years later, we got an investment from the World Bank. We now have Portage, which is the Fintech arm of Markou of Canada. We also have EBRD. So you kind of pick up the right investors or more institutional investors down the road, as opposed to a priori.
Yeah, that's super interesting. I think it's particularly picking up the point on the kind of European investment strategies. It gets mentioned a lot in the kind of one is that you kind of have to sort of, Europe likes a bit more of a kind of longer term view. It wants to see some momentum, then you might follow some more investment, or they want you to bootstrap it to get it to a certain point, and then they might come on board. Whereas the US, it can be a bit more, fast money as long as the returns look pretty dramatic, but you can go with a business plan. So it's interesting that culturally they're different, and that your investors change over time. I wanted to talk to you because we spoke previously. And we talked about your distribution model is quite blended, because as much as you're a sort of digital full stack insurer, not everything you do is digital, but you're working with the kind of more traditional kind of distribution models as well.
Correct.
I wanted to get into your thinking about that, because, one might see that as kind of not fully embracing digital, but it's more complicated than that, one would imagine.
Sure, exactly. I think for us, when we first started, we had two things that we wouldn't, trade, we wouldn't sort of take a different view. We're sort of very dogmatic about owning the technology and building everything from scratch. And B, we wanted to control our factory from the very first moment until the very end. So policy administration, coding, pricing, the whole shebang all the way to claims. Now, the third thing we wanted to be agnostic, actually, as opposed to dogmatic about it, was the distribution. And having looked at this part of the market, and this part of the world, we realized that what happened in the UK is a very UK event. The fact that everyone went suddenly to digital and then aggregators and so on, to such an extent, it's partly UK specific, partly theological, anthropological, but it hasn't been replicated anywhere around the world. And we did sort of see some of the failures of direct in Europe before we even started. People went very aggressively into Poland, believing that direct would pick up, Italy, Spain, and so on. And they saw some pickup, and there were some, good cases, or directly Nia did pretty well. Some of the guys in Italy, struggled a bit, but over time they did it. But it wasn't this sort of hockey stick experience that you had in the UK. So we asked the question in reverse. Okay, guys, given that you control technology and you control the factory, why do we have to be dogmatic about distribution? Why don't you sort of open it up? Now, we are called Hellas Direct because it was the cheapest URL we could find at the time. I actually bought hellasdirect.gr for like 29 euros, and we thought it was a pretty cool thing to have, right? Our company is called HT Insurance Limited, and our group will be called Rethink because that's another cheap thing we found back at the time. Now, but since we launched, we have a product for direct, which is Hellas Direct, and a bunch of versions of that. We have, for lady drivers, we have for young drivers, and so on. But again, these are versions of the same direct kind of product that goes out on mobile phones, on websites, and so on. We have an aggregator presence. And aggregators are picking up in Greece quite quickly, as you would have in Italy and Spain and the rest of Europe. So we have a presence there, and we can quickly go into an aggregator with any product, with any price, with any segment, and so on. And thirdly, we have a physical brokers channel. We have a product called Unique, which is actually dedicated for physical broker channels, and it's doing pretty well. And it just happened that last year, it was the first year that we had an equal presence between direct, aggregators, and physical brokers.
Wow.
Now, there's another channel that we're going after, and this is something that hopefully we'll do something this year. Banks. Bank assurance in this part of the world works. For whatever reason, again, people have to look into theological or anthropological reasons, but in this part of the world, even after banks being bailed in, so they took money from your own deposit, you still buy financial products from banks. That's not happening in the UK. That's not happening in some other markets. And when I say banks, I would actually include in there fintechs. It could be Revolut, it could be anyone else. And I think for that, we're super keen to have a product presence either in traditional banking, the digital version of traditional banking, or even having an embedded version in some of these sort of neobanks that are coming to this part of the world. But you're absolutely right, Alex. In this part of the world, I think you have to have a product agnostic or a distribution agnostic view of the market. Otherwise, you run the risk of being isolated in such a small part of the market, and all the economics working against you. Cost of acquisition, spending way too much on marketing, and you ignore sort of the 80-85% of the market that could be actually operating just next to you.
Yeah. Do you think it's it's one of the things that steered me away from specifically having innovation in the title of the podcast, because I think it has an obsession with tech. Do you think there's a slight obsession with tech when it comes to insurance, that sometimes I know there's this balance between we need to be able to look in the future and offer customers things that they're not aware of, because the classic Henry Ford thing is I've asked my customers what they want a faster horse, and I believe in that. But there's also an element where I think we sometimes kind of push tech when it fails to serve the customer base.
Correct. You're absolutely right. Yeah, and I think for us, we're a tech-enabled sector or a tech-enabled company, as opposed to a full-blown. We're not doing deep tech here or deep engineering. Having said that, you should have an open mind on both. If it's something that you can disrupt, and it's the Henry Ford example that, for example, we came up with the concept of insurance by the day or instant claims, so the ability to pay someone and do all the sort of instantly on their card without doing any sort of paperwork. Again, these are big innovations for our sector that you can change the path of the company. Having said that, you can actually do a lot of innovation even in intermediary space, or a lot of innovation in the way you distribute a product or embedding the product and so on. That is not, doesn't have to be like, getting a sledgehammer to crush a little nut there. You can actually enhance that a little bit without taking it 15,000 steps ahead. Now, as someone who's very purist and someone who comes from an engineering side of things, I keep using the other expression that for anyone who's got a screwdriver sees the world as as a screw, or as like a hammer, everything is a nail. So again, just because I came up with this, I have this fight with our engineers every single day. Just because I came up with this one, why don't I use it? The answer is, guys, for us, right, in Greece right now, we have about 2,000 garages on our platform. We're the #1 sort of platform for managing body shops effectively. And some of the tech innovations are quite basic. It's a virtual assessment. My daughter will call it FaceTime. It's the ability to pay instantly on their IBAN numbers. My son will call it bank transfer. So it's not. But again, putting the whole thing together, it makes perfect sense. Similar to a lot of companies in the UK that are in the billions right now. It's just about delivering from A to B. Now, sure, it's not that they haven't brought drones for the delivery. They still do it via bicycles, as far as I'm concerned, which is something that was invented 200 years ago, right? So again, back on your point, I think it's very, very easy to go down the wrong path and over-engineer something and try to convince yourself that that's going to change the industry, as opposed to feeling safe and feeling good about a little bit of innovation without really sort of smashing, all the nuts around, if you like.
Yeah. And I think that's got lost in loads of sectors, and I don't think insurance is any different. I mean, I was having I won't name them because it's unfair, but I was having problems with one of my providers the other day, and it was a tech-enabled product on the financial services side, and it was everything was tech-driven, and it was kind of, I was stuck in this kind of loop where I had a problem that wasn't solved by any of the chatbots, and it wasn't solved by any of the help sections. And it was the classic thing of I really genuinely needed to pick up the phone to someone, and I was like, and that wasn't an option. And you think that's not serving me as a customer. Now it might have been a unique example, but I do think we run the risk of trying to automate everything when particularly an experience. When you talk about an experience, what is your experience of particularly insurance? Sometimes humans are particularly useful in that process, and maybe they don't need to be in there. But I think it's about serving what's right for that specific moment, rather than obsessing about tech.
On this one, just the other observation we have is that sometimes we feel uncomfortable as technology companies that we haven't thought about it well enough, because by thinking about it a lot, something big will happen. Again, I will use the example of WeWork. Sometimes, the poor guy that was running Rebus was saying, guys, they're doing exactly what I do. And, I've got a much bigger and much more sort of sexy than these guys, but they have 20 times my valuation. But again, sometimes we're going down the wrong path. Now, again, it's a very fine line between, say, getting people to innovate and to push the teams to the limits, to have the right product and change an industry, right? Versus, being a little bit more relaxed and say, guys, we don't need to do that, and maybe we should think about this side of the business. And again, you mentioned claims earlier. It's a very good point. A lot of the fintech or the insurtech companies are actually putting a lot more energy to think about what comes 1 millisecond before a claim. So what the 90% of your consumers are doing, and for the 10% that crash, they don't give a shit about it. They would outsource it to somebody else. And they say, oh, I'll think about it when the time comes. And the answer is, guys, maybe you are over-engineering the front part, really. So again, it's a very fine balance. And there's arguments on both sides. I'm of the view like you should have a very pragmatic business side of things, that sometimes if a solution is so obvious, just do it. It's okay. If it's such a simple solution, why not? Why don't you have to over-engineer it?
Yeah, no, that's very true. And I think we touched on it really in that last point, but I wanted to ask you how important is brand, and particularly how important is brand in a really price sensitive market as auto, or maybe I'm making an assumption because auto is particularly price sensitive in the UK. I don't know in other parts of the world, but I'm assuming it is fairly price sensitive. But how much does brand play into that, Mark?
Right. And again, it's very UK driven. I think motor tends to be commoditized around the world. However, the price sensitivity is not a global phenomenon. It's a very UK one because you have 200 or so direct offerings, you have aggregators and so on. Around here, just to give an example, there's a central manufacturing company called HD Insurance. Our unique product goes to brokers is about 20% more expensive than our direct product, which is probably differently priced to the one that we have on the aggregators. Still, there's different people that buy this stuff. I'm more of a Malcolm Gladwell kind of philosophy that there isn't one tomato sauce. There's probably 4 different sauces. It's the chunky one. So in this part of the world, the markets are not as efficient as people would think they are. And it's not like suddenly I'm going to come with a product that I'm like €2 cheaper than Allianz, and suddenly the whole thing will shift. Now, you cannot ignore that part of the market. Like, our pricing guys will say, sure, for the direct or for the aggregator part, you need to have pricing is what is all about, blah, blah, blah. But a certain part of the market is actually about, service. That's what we folks are saying about sort of Germany and so on. You need to sort of reinvent service and so on. People do care about what other things you're doing, but there is, road assistance or other sort of service that you put around. I'll come back to that in a moment. And the point is that the insurance consumer over here will take a lot more time to go into a fully commoditized mode, especially because they've been buying insurance in a very sort of personal way for such a long time. Hence, you don't have the dominance of Amazon in this part of the world. You may have different sort of local models coming up that are sort of defending that. Now, there's a slight sort of complication in this part of the world when it comes to claims payments and servicing the consumer. Reason is that the average age of cars around here is about 16 years compared to 7 years in the UK. So people do break down more often. The frequency of road assistance is probably 3 or 4 times the frequency you have in the UK. So servicing takes a totally different perspective than you have in the UK. So having sort of good servicing or good presence, you maintain retention, maintain sort of customer happiness, and it's not simply that the consumer looks at you purely in a transactional fashion that once a year, if you're not cheap enough, I'm going to change providers. Plus, we're going to see a lot of merging of different parts of the mobility space. In this part of the world, insurance versus car financing versus emergency service and so on are much more convoluted and much more sort of stuck together compared to the UK, where people are buying insurance from Admiral, they're buying road assistance from Green Flag, and they do their own thing.
Yeah, that's interesting because I've actually literally just done car insurance, and I realised that I bought it the other day, and I couldn't tell you who I bought it with. I just went aggregator, which is the cheapest, because my existing supplier obviously sent me an inflated quote because they'd obviously had to go so low to get it. And the aggregator model is obviously it's been in the press a lot. It's been getting some, it's under a lot of pressure anyway because of the sort of price, specifically around price. But at the end of the questionnaire was like, do you want to add assistance on? And I have assistance with, I think, the RAC, but it was interesting that it never crossed my mind to put the two together. A very fragmented model, it's not very efficient use of my time, to be honest. I probably should put it together, but And
I think for us, people talk about this concept of an ecosystem, and I think we are living and breathing ecosystem more than some of the other. Hence, we as Elastic, we bought the largest road assistance company in Cyprus. We're doing the same thing in Greece. We're putting the whole thing together because partly your consumer, your mobility consumer may start the journey from a different point of view. They might start the journey from a breakdown. That means that they will buy a new car, and then they will buy insurance, blah, blah, blah. In the UK, it may start from a different path. It may start from a second-hand car dealer, or the leasing guy, and so on. But I think here in Greece, given and all this part of the world, you have to be an active participant in the ecosystem, because you need to protect your own retention, your own pricing, and so on. If you're just an insurance provider, I think one way or another, you go back to your negative scenario, like, you're just like a price giver and that's it. If you've got good pricing, great, who cares about claims? Next year, you're gonna change your insurance and so on. Now, that gives you also another sort of dilemma we face, like, do you wanna have good claims or not? Because let's say every time someone has a claim, you're gonna increase the price and that person will actually go to somebody else. Why do you need to have good claims? I think for us, it started as effectively as a cost minimization, or like controlling fraud and all this good stuff. But at the same time, we realized that by having a good claims experience and by having a good road assistance experience was a very, very good retention tool. That, and a good also client attraction tool, because people realize that you're a serious player, and in this part of the world we have a lot of not so serious players, and people realize that by you having a good sort of claims experience and being a fair sort of claims servicer, that gave you a lot more retention. It gave you a lot more sort of lower customer acquisition costs and so on.
I think there's an interesting point in that because of I haven't got a particularly new car, but it's relatively new and it gets serviced, so it doesn't break down. Lucky enough, touch wood, I've not been involved in any accidents. So it's actually hard for insurance companies to have enough touch points with me as a consumer, for example. Yeah. Like I have no reason to engage with them. And that's why I think brand's quite interesting, because if an insurance company on the motor side, particularly in the UK, almost ignored the fact that they were a motor brand, and just tried to create a brand which was kind of just aspirational anyway for various reasons, I've probably been more likely to stick with them. But it's a huge challenge, because if you don't have any touch points with a customer, you can't really impress upon them. Whereas the irony being that if I had a crash and a claim, the experience there is more likely I'm more likely to stay. If it's good, I'm probably stick with them. But
that's right. No, I think the UK, and again, it depends on the markets. And again, for the UK, we when we first started, we spoke to the Admiral guys a lot. We have huge respect for them, and their view was very much more along the lines of cost containment, cheap, cheerful, and I can always sort of beat everyone, which is a fantastic model, and it works really well in the UK.
Yeah.
In this part of the world, and I would put Italy in there, Spain, and so on, it doesn't work like that. No. There's people are not as sort of price driven as you would think, and they do appreciate service. They do appreciate the brand. They do appreciate the fact that, for example, in our case, that we are a Greek insurance company that started locally, that we're doing the right thing, and if you ask people about, we're now the number one recognized brand in insurance. Even above people like AXA and Allianz and so on, and that it wasn't because we spent millions in marketing. It was because we kind of engineered the product, and we engineered the touch points with the clients. Yeah. Now we're just broke into the top 10 insurance companies in Greece right now, and we're going to grow. But I think this is the momentum we wanted to create behind the brand, become the service, and so on. That enables you not to become like a sort of an expression like a victim to the price bitchiness of everyone around you, and to be able to build good service and good touch points that will give you sort of a better margin and a better sort of long-term economics with the client. Now, we're not there yet, because I think there's still a long way to go. But that's a very, very kind of localized theme, and it doesn't. I mean, when you look at Greece, yes, we have some resemblance with Italy, Spain, and so on, but this has nothing to do with Poland or Romania or even the UK. So when you travel around Europe, you have different sort of models. Now, in this market, you need to be aware of all that. You need to be aware of the fact that the average car age is 16 years old almost, and people will probably be changing their cars pretty soon. So you have to consider car financing, you have to consider emergency care. These are natural touch points that want to come in your client's life. If you want to ignore that, then at your own peril, because let's say I'm insuring your car, but I don't have your road assistance. The chances are you're going to have a breakdown before you even crash, touch wood. So I'm not going to be there, and whoever provided you that service, they will steal you away from me. Yeah. Or if you break down and you want to buy a new car, the guy who provides you with financing at that point in time, chances are that they will get the insurance. So it's kind of different perspective and different sort of customer journeys. And one of the things we're becoming paranoid about in our world right now is all these customer journeys. It is not a simple buy, renew, cancel, buy, renew, or crash. It's much more complicated than that. Like buy, pay MOT, finance MOT, finance change, or maybe buy son's motorcycle. There's a lot of other sort of permutations around that. For us, amazing opportunities, as you rightly said earlier, to be in someone's life much more frequently as opposed to the annual, anniversary of your renewal.
Yeah, I think there's so much interesting stuff to go with the cross-pollination. I mean, I was thinking from a perspective of, if I had my phone on as a sort of black box in my car, which is a kind of common way to do it. If you know that I drive to the gym 5 times a week, are you not kind of reaching them out to me and offering me health insurance? Or there's so much, and that's where data becomes kind of powerful and digital first.
That's right.
What I was going to ask you is competition wise, where do you see your kind of competition coming from most directly? Is it legacy insurers? Is it other startups?
The good thing about these markets around here is that first of all, the international, so the big boys are not as strong over here. So, for example, there are no UK players around here. There's no Swiss players around here. So we have a couple of Germans, and all the French are on their way out. AXA just sold their French their company over here. So the international presence is not as crashing or as sort of heavy as it is in other markets. Two, the local players, a lot of them, actually more than 50% had financial problems 10 years ago. So a lot of the big boys of the past are no longer with us. We also experienced the equitable kind of events that you had in the UK. Yeah. And the current locals, they are okayish, but they're not as deep pockets or as strong as they should. Now, private equity is beginning to come around here. So we have people like CVC or people like Fairfax and all those guys. But again, from their side, they are missing their local operating angle, the technology, and so on. So I think it's, from a competition perspective, is not as lethal or as sort of crashing as it would have been in some of the bigger markets that some of our other fintechs are operating. Now, back to your last point about fintech coming into this part of the world, again, is not happening as much as we would like to the point that we want more fintech presence, because it would have been nice to have a couple of disruptors on the road assistance side and a couple of disruptors on the black box side of things, but that's not happening anytime soon. Now, for us, the challenge that we're going to have is mostly that was before COVID, actually, market stagnation. That sometimes in these kind of markets, because of the lack of enthusiasm and so on, things just don't change. And you have to work extra hard to convince people to move around. Partly the digital revolution, partly COVID can ensure that this is not happening. So things are moving up and down. Sure. And the second sort of risk that we have is somebody, some crazy guy coming to town and killing the market, which happens, frequently in our world. I think that would have been more of a risk for us 5 years ago when we were still, beginning. Now we have about 250,000 clients. We've got more than 1 million on road assistance. So we are, a fairly okay force in the market. So we'll probably be a strong opponent to who comes over here.
Yeah. Well, that's the thing. You're the establishment now. You don't,
exactly. So someone else will come and disrupt us.
Now we're going to crush the startups. No,
we are, again. One of the good descriptions are like one of my good friends from McKinsey is the founder of ZocDoc. It's a company in the US, so medical directory, and they're building their fantastic ecosystem over there. He keeps saying to me that I'm one of the few technology companies that I make money, I'm profitable, and I'm a normal kind of company. So for us, yes, we're techie, we are, we live and breathe through Insurtech and all this good stuff, but we're not consuming a lot of capital every year. We are profitable at the bottom line. We kind of grow in a healthy kind of way, which doesn't sound interesting from a fintech perspective. Then again,
call yourself a fintech. You're not burning capital. What are you doing?
Exactly. And we were good about we survived long winters. We managed to walk through hibernations and the sort of a scary winter months and so on. But I think for us, we feel good about our position right now.
Yeah.
Volatility is good for us, and don't get me wrong, we don't sort of have people to come over and crashing markets, but we are more on the long volatility trade as opposed to stagnation.
Yeah, of course. Well, I'm conscious of time, so I want to wrap things up, but I wanted to give you a chance to sort of touch on where's next then for you. Continue with the geographic expansion, or is it more focusing on going into slightly different verticals?
I think both. I think for us, we're doing three things at this point in time. First of all, we are we're stepping on the gas with regards to Greece and Cyprus. So we have a run rate of about 50 million euros for this year. We grew from 12 a couple of years ago, so we've grown quite fast. But for us, the aspiration is to reach 200 to 250 million in this part of the world, which means that we're going to be less than 10% of the market in Greece and Cyprus combined. We are doing it, as we mentioned earlier, across different distribution platforms, different products. Mainly, it's going to be motor and home, and I think we are kind of agnostic where this growth will come from, whether it's brokers or direct and so on. Now that gives us a very, very good sort of starting point to do our number two strategies, is to extend beyond just insurance, to play the full ecosystem and monetize a lot of that. Short of starting our own aggregator, we will bypass that, but effectively, because we own road assistance in both countries, we will do a lot of the things that AA and RAC did. So we will be doing anything from selling batteries, doing sort of on-spot repairs, tires, all the way to lead generation to garages, financing, the whole shebang. So for us, that could actually be larger than insurance at some stage, but it's a funny challenge, because there we have the distribution, but we don't have the product yet. Insurance, we have the product, but we don't have the distribution. And now, thirdly, it's international. And I think we wanted to start international with Alexis, my co-founder, when we knew that we could sort of depend on our first two pillars. We could have gone international 5 years ago. We think it's the wrong thing to do, especially when you're too soon into your sort of growth. You will feel uncomfortable, your shareholders will feel uncomfortable, and by opening up too many fires at the same time, it's not the way to go. But effectively, right now, for us, we looked at the whole area around here. So attractive markets for us are, in no particular order, it's Romania, it's Czech, it's Slovakia, it's Slovenia, it's Croatia. All of these markets we can passport almost instantly. We can go there. We have our own technology. Sure, there will be some sort of idiosyncrasies to take care of, but we're going to go there with multi-product, multi-distribution, and we quite like that space. Now, we think that by going to these markets, it's not going to take us the 7-8 years that it took us in Greece. It's going to be much faster. Yeah. Plus, we do believe that our unit economics will be superior to what everyone else has done. We've cracked it in one jurisdiction. We can do it in other jurisdictions as well. But again, if you ask me about sort of the next 2-3 years, so my sort of energy and so on, will probably be 1, 2, 3 in that specific order. Yeah. We think that our shareholders will make most of their returns from 1, 2. I think the third one will probably be our the next, even actually the next round of investors. Yeah. So I think for us, we have enough capital to execute 1, 2 successfully, and then number 3 we'll have to wait.
Yeah. Well, And that's always a journey in itself in the investment thing. But Emilios, that's been fantastic. Thank you so much for spending the time. Really appreciate it. That was really insightful. So look, I wish you all the best, and I hope to get over to Athens at some point in the future, and perhaps we can meet in the flesh one time.
Exactly. I mean, you're always welcome to Greece. So I think it's a great place to visit, not for insurance or tech, but there are a few other good things around here. Thanks for your time, Alex. Really appreciate it.
Yeah. Thank you. All the best. Bye.
Thanks, man. Take care.